Move into today's move. Took one trade and closed it within like a minute. I'll get into why. And yeah, so it was what, 17 pips today. So literally very quick move for about £31, 51p. Yeah. That basically comes to 0.5% profit and puts me up 2.39% on the month, which isn't bad. But ultimately there's a few things that affected this today. So the first being, obviously on the higher time frame, we are bullish at the moment. As you can see, we're about to come past all-time highs again. If we haven't already swept it, not quite. We're just underneath it with the wick of this 4 hour. Secondly, this here, we traded back down into it, pushed back up to then take these highs. And that's previous daily low there. I was targeting that, which, as you can see on the 4 hour chart, we don't really need to go lower unless price was to sweep that once more, bounce off this order block and then come up. But yeah, I was kind of I was in a few different minds about this setup today. So we accumulated during the London session and then traded back down, swept what is this, I think Asia low. After London session, this was about 8 o'clock, 7:45, and then we had CPI today, which absolutely tore price up to the previous daily high. So that was a sweep there. And then from that, we got this move here. Now, at the time it formed, I was thinking, there is an inverse there. But as you can see, we've got this big imbalance here. And price is not necessarily needing to go lower, purely because of the fact that we do have this big imbalance. And as a result of that, I was looking at the range, the Fibonacci range, or equilibrium of this move up coming into the market open. So as you can see, price traded back into equilibrium, then made a further push up and inversed this again before then pushing back down through it. And then if I was to make the right entry today, unfortunately I was a little bit busy at work, so I literally just missed it by a matter of seconds before it dropped down, maybe like 20 seconds. Entry short should have been from the retracement up into this inverse fair value gap to then target either this low here or like the 0.62 retracement level. That would have been ideal. And that would have been a really nice trade. If we go from the bottom of the inverse, and I think it was on the 3 minute or the 1 minute even. I think it was on the 1 minute, or even just above the inverse fair value gap for the stop loss. I know that my chart's very messy at this point with all of this stuff, but yeah, even that to the 0.62 range is 4.6 to 1. Put that on a 3% risk, that's about 800 quid or something. So that could have been absolute bang up, but yeah, unfortunately, like I say, I was very unfortunate with the timing. I was also a bit uncertain, but you can see here, after going up and down through it, then up again, then creasing through it again, it's more likely the price is going to then push down or continue down a little bit further, as it has done here. And you can see taps the OTE of that range, comes back up, and then once more a bit further down for the sweep, and then you get the move up around 10 o'clock onwards to take the previous daily high again, and the previous session high, well, the current session high. So I'd imagine that price is going to come up to the 0.5 standard deviation level of this range, purely because we are so bullish at the moment. But at the same time, I was thinking, in line with the model, we've got price trading above previous daily high, coming back through, displacing down, got the inverse here, and then we had a lower time frame fair value gap form here. I think if I flip this round, pop that like that, so you can see that inverse fair value gap bang on the optimal trade entry. So that would have been a spot on entry if I'd managed to get in there in time, but I didn't, so I waited a little bit longer, a few more minutes, just to see what the move was, and then from there we dropped down onto the 1 minute. Oh, I was looking at it on the 3 minute, I think. Where was I looking at it? It's a bit less clear. I think I know at the time when we were forming this candle down on the 1 minute, it looked, or the 3 minute, it looked as if basically that 3 minute candle that comes back up, it looked as if that was going to form a fair value gap spot for me to go short from that fair value gap, which, as you can see, is here in line with the break of, well, it's not even really a break of structure, is it? We're just filling the imbalance that was created. So that's misread on my part there, but yeah, so I continue to wait out. Price comes up again, trades into this imbalance, and then it drops back down. So I saw price trade back up into this where the fair value gap would have been, and then I got in short on this, like it's called, on the reaction downwards from that fair value gap. I just went in short, and I was thinking, right, we're gonna go for previous daily low, and then I was looking at the time, as you can see, we were at 9:57 my entry, well 9:58 here, 9:59, 10 o'clock come down, and then price goes back up at the 10 o'clock reversal, as we have seen many times in the past. So use my instinct here. I wasn't really comfortable with my entry. If I'd gotten in short here, this would have been much better today, and would have been able to close out on a much bigger profit number today. But yeah, we take £31. It's not bad. It's for a minute's work, like, do you know what I mean? But ultimately the execution was just a bit off, and I did realize I was maybe chasing it a bit more than I wanted to. But I'm glad I closed this one early, even though if I had just held it for like a minute longer, this came down to about 130, 160 pounds, that wick. So it's one of those, you sort of weigh up the risk to reward there. And although I could have made quite a bit more today, I thought, it's possible, it's very possible that price is just refilling this imbalance on the higher time frame to then continue upwards, which, as you can see, has been the case. So yeah, we've got no red folder news tomorrow, but we do have PPI and unemployment claims on Thursday. So we'll be looking at the markets for the rest of the week. Might not even really need to trade for the rest of the week, to be honest, unless it is crystal clear. But yeah, it's a good learning point for me today. Even I walked away green, but it could have very easily been like £187 stop loss right there. If my stop was above the inverse fair value gap, I think it would have been £260 stop. So yeah, to walk away with 30 quid today is not bad. I'm not complaining about that. Just for reference on the video, so that was my setup, and I put 25 units on this. You can see that is 3%. That would have been a £540 take profit, 186 stop. So it's one of those. Not really gonna complain about that. It's just something to take away. Now, in terms of how price moved upwards from 10 o'clock, you can see we displace here, further displacement, still not a fair value gap, I don't think, unless on the 1 minute. Yeah, so it's still not massively clear. We get the break of structure here, and then push up, and then the fair value gap forms within the inverse fair value gap that's been tested multiple times. This is then a sign that price is going to push up a bit further, just because it just is unlikely, having been through this area multiple times, that it's going to come back up and then continue down. It'll act as like a breaker, and then typically once we trade up into this, well, we filled this imbalance here, typical of the silver bullet model. You know, price tends to hesitate a little bit, and then you can see coming up to 11 o'clock or 10:50 candle, session high gets taken, we sweep the data highs, and yeah, price has just continued consolidating upwards since then. So yeah, overall, you know, execution, my mindset could have possibly improved a bit today, but ultimately it was just unfortunate timing. It's like my manager was near my desk at the time, and I just wasn't looking at the charts in this specific moment where price retraced up. If I was, then I would have been much more likely to catch that move down, and we could have secured a bit more today. So yeah, that's going to cover it for me today. Like I say, 2.39% on the month, 0.5% today on the account. So yeah, with all that being said, I'll be back tomorrow with another recap on the markets, mate. Have a good one.